Hello again. Welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. I'm going to link in the show notes below to a post on Twitter by @UraniumGods. It's absolutely hilarious. It's a sketch of me speaking to a family of animals in the forest, and it says Justin Hune's Mental Health Minute. So I appreciate the fact that some of you all are enjoying this, and perhaps I'm bringing some calm and some patience to a volatile market. So that's really nice to hear and quite funny. Before we get into it, again, nothing in this video is meant to be investing advice. I'm not a financial advisor, and this is not financial advice. Please always do your own due diligence when investing and always take responsibility for your own choices. Jumping right into the daily scoreboard here, the spot price of uranium this morning, relatively flat, $37.75 a pound mid-market. I do believe that the slide that we saw last week in particular, but over the past couple of weeks, is probably mostly done. We might see a little bit of chop in this area. I'm not thinking that this is going to be a dead cat bounce necessarily. And since the Canadian market is closed today due to Thanksgiving, which, by the way, happy Thanksgiving to all my Canadian friends. The Sprott Physical Uranium Trust was not in the market. So there's not, they closed on Friday at a 6.2% premium to NAV, but they weren't in the market today for obvious reasons. We'll see if they issue more shares and buy more uranium tomorrow. On Friday, they acquired another 400,000 pounds. They issued shares and raised another $11.4 million, closing the day with $7.9 million in cash. They bought 1.4 million pounds last week alone, which is why it's so strange that the price fell in the way that they did. But I'm going to speak on that a little bit more in the mailbag question today. Since the 17th of August, which is when they launched their ATM, they have raised $516.8 million and purchased 12.3 million total pounds of uranium. Absolutely astounding. The ETFs, URA reported no change in outstanding shares. URNM reported 100,000 shares outstanding, new shares, which means that 7.5 million in mandated buying from URNM. That likely happened on Friday. If not, it'll carry over slightly into tomorrow when the Canadian market opens again. Actually, that's in the US, pardon me. So that probably was some buying today, and we'll check out the charts in just a second. The AUMs for these two trusts since the November end are up about $50 million in combined AUM month to date in October, just a week and a half here. And combined, they are just under 1.6 billion assets under management between the two ETFs. Pretty incredible. Let's take a look at the charts. Looking first at URA, I'm really liking this setup here, guys. I really love this tight consolidation here, this kind of rising channel that's really tight ranges. And most of the time, these tight ranges will break out in the direction of the overall trend. And if you look at the long-term moving average, it's very clear the overall long-term trend here is up. So the chances are this will break to the upside. If for whatever reason it goes against the statistic odds and breaks to the downside, I would expect the 50-day to be support. And I do think, like I've mentioned in every uranium market minute, probably in the past couple of weeks, that I do expect seasonality, and I think it's coming soon. This is a really beautiful looking chart, in my opinion. I really like that tight range, and I think that it's going to break to the upside. Let's take a look at URNM. Very similar chart here. Even holding up a little bit better, still above this previous resistance point by about 5% here. All the moving averages, long-term moving averages moving up. Clearly, this is a great looking chart, in my opinion. And again, this tight range here will break out at some point, and usually that breaks out in the direction of the long-term trend. Let's take a look at a couple of the large caps. Cameco. Mixed day for Cameco. Opened up and kind of traded up and down a little bit. Volume still relatively low, kind of indirectional, although the chopping range is a little bit greater for Cameco and kind of in an uptrend. However, it's kind of resting right around that previous resistance back in June. Let's take a look at NextGen. Similar chart. This one hovering just above the 50-day and a pretty tight band here. The indicators, in my opinion, here look like they're closer to being ready to go than the ETFs. But of course, NextGen with its substantial market cap is a pretty big holding in the ETF. So when those ETF volumes come back in, we should see these big caps move first, which is usually how it works. So let's take a look in the mailbag and see if there's a question for us today. Justin, has the recent implementation of SEC Rule 15C2-11 exacerbated the precipitous drop in the spot uranium price? Yes and no. So first, basically, the spot price, as I've mentioned before, it matters and it doesn't matter. It's the primary reporting mechanism that the investing community can watch and can see on a daily basis, even intraday. So it matters in that it's very visible and it's what we can all watch frequently. It also matters in that it informs the long-term price, especially when there's not a lot of long-term demand. They'll actually take the long-term price and price it off of the spot price, adding in the cost of capital and the cost of time, trying to price in future deliveries. It also matters in that oftentimes long-term contracts are at least partially referenced to the spot price. So at the time of delivery, if you're paying, let's say, a 50 or 60% spot referenced portion of your contract, of your long-term contract at the time of delivery, you have to pay based on the present spot price when it's delivered. So in that way, it has a pretty profound effect. However, we've seen the spot price rise really, really fast with Sprott's buying August to September. And then we've seen it fall really fast as well. It didn't come all the way back down to where it was. It looks to me like it's making a higher low, which is what it's done for the past 5 years, right? So nothing real out of the ordinary besides the speed at which it's rising and falling. With that said, noting the jump in the long-term price by both primary consultants, UXC and TradeTech, UXC reporting $40 a pound, jumping up from $33 a pound in a single month. That is actually the largest jump in the long-term price since 2011 for UXC. And TradeTech reporting a $45 a pound long-term price. But back to SRUUF, the OTC ticker for the Sprott Physical Uranium Trust. So what happened since this SEC rule was implemented, it had to do with the financial documents for the Sprott vehicle. And as you know, when this SEC rule came into play, Sprott Physical Uranium Trust did not even have a single quarter under their belt of financials to report to the SEC, hence the temporary blocking. So what Sprott is doing currently is they're upgrading their OTC ticker from pink sheets to OTC bests, OTC QB. And at the same time, dealing with the SEC, they expect that sometime in November, this will be back free trading on most brokerages on the OTC. We have been hearing that some brokerages still are allowing you to purchase this ticker. I don't recall if it was Schwab or Fidelity from the US side, but most brokerages are still in sell only. So what that means is if you had purchased, especially at a lower price, right? If you had purchased SRUUF back in August at a lower price and your brokerage is only allowing you to sell, clearly that's had an impact on the price of the SPUT vehicle and the price of that stock. Strangely enough, though, the motivated seller that was in the market last week, so Sprott just kept lowering their bids as they will. They're basically going to buy based on the cheapest offer and the cash that they have on hand. And the reason they can do this is obviously the cheaper the uranium, the more that they can buy with the cash that they have. So they kept lowering their bid, and the seller kept lowering their ask and kind of matching them as the week went along. And so even though we've seen selling pressure in the actual SPUT vehicle in the stock, the price of uranium had continued to drop. Therefore, Sprott was able to buy 1.4 million pounds last week because they stayed at a premium to NAV pretty much the whole week. So it's all relative, right? And in my opinion, that now they're going into trading tomorrow, Tuesday the 12th, at a 6-point-something premium to NAV, and they're likely to come into the market pretty heavy this week. So what we've been hearing is that this seller is very likely close to exhaustion, if not already exhausted. I believe that what happened was there was a seller that just needed the pounds off their books for whatever reason. A lot of times there's balance sheet constraints, right? So it doesn't always make sense. Why are they selling lower when Sprott is there buying? Why not just raise the ask? Sometimes they just need to get off their books. And if Sprott's the only buyer in the market on that given day, on that given week, then they're going to take what they're going to pay, and they keep lowering that offer just to clear something off the balance sheet. So that's what I think happened last week. No concern really, in my opinion. And I think that a lot of these charts are looking very constructive, and we're close to a seasonal move. So expect that the SRUUF ticker will be available free trading again on the OTC sometime in November. And I believe we're actually going to see the start of a seasonal move before that happens. So don't wait on Sprott to enter these positions if you're still adding your positions expecting a seasonal move. In my opinion, at least I'm not anyways. And also, if you're in the US and you want to exposure to the Sprott vehicle, sign up for Interactive Brokers and go ahead and start trading on the Canadian exchange directly. It takes a couple of days to get deposits to clear and set up the account, but it's really not that big of a deal. And honestly, having access to the primary exchange of any particular ticker that you're trying to trade is going to give you a lower bid ask spread on the buy side and the sell side, and it's going to give you far greater liquidity than the OTC typically offers. So especially if you're trading in larger positions, you really want as liquid as a vehicle as possible. If you're trading small positions, a lot of times the OTC is just fine. But if you want to expose yourself to the Sprott vehicle before the OTC ticker is back, then sign up with Interactive Brokers, get that going so that you can buy on the TSX. In my opinion, the SPUT vehicle U.UN is a screaming buy here. So hope that helps. And I won't be doing a market minute tomorrow, so I'll see you guys again on Wednesday. All right. Cheers. Thanks again.